Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, December 15th, and on the eve of the FOMC interest rate policy decision tomorrow. It's good to be with you guys here this morning. We'll go over some preliminary setups on all the dollar crosses, obviously. As we get into that major event risk, we will have a session tomorrow morning. So again, we'll get one last look ahead of the interest rate decision. Quick reminder, markets are largely factoring in about a 74% likelihood that we'll see an interest rate hike, more so than whether they hike or not. Like I said in yesterday's note, guys, the risk at this point is if they don't, because consensus is that they will. So the devil will really be in the updated projections as it pertains to growth, inflation, and interest rates that we get from all the committee members, as well as the Q&A with Janet Yellen. So we'll go over the dollar crosses for sure. As always, feel free to throw any questions or trade setups. Tanongasak, I hope I'm pronouncing that right. Great to see you in the room. Bernard, definitely we'll take a look at DAX and S&P. Jot that down. Some nice moves lately. I think the DAX is coming off of interesting support there, Bernard, so I'll take a look at that. The S&P did rebound already, but I think the DAX is coming into a nice area as well. All right. So let's jump right into the charts, and as always, guys, feel free to throw in any questions. First thing I want to go over is last night's update on the British pound and the Euro Oz. Unfortunately, neither of these trades actually gave us any volatility in overnight trade. Sterling continued to sort of hold this range here near term. Really clean setup in that you have the opening range low at support, 51.13 to 51.18. We rebounded off that yesterday. Near-term resistance, 52 into 52.20. We opened the week just above that and failed. So you have a really clean weekly opening range here with an upside bias above 51.13. So remember, we raised our bullish invalidation level to the low that we made there. So we're looking for a stretch higher. It's been a little stubborn here lately, but here's what it looks like on the intraday. Now, there wasn't much volatility that you saw on the CPI print. We came in right in line with expectations, year on year, 0.1%, a little bit weaker on the RPI, but I wouldn't really stress that. Core CPI, 1.2% year over year, is sort of what we wanted to see. So status quo, no imminent move to really push policy in any which direction, and the market didn't really give a damn. So here we are still holding that range. I do like the long side, looking for long triggers above 51.13, 51.18. Haven't taken any positions again since last night in this. We did jump into some Aussie Dollar specifically, and what else? Sterling yen, also taking a look at that. But as of now, here's what we're looking at: sterling pound, pound sterling. Not really much change in any of the major key levels. Looking for long triggers above 51.13. Need to get through this region to really set this thing off to the upside. Remember, on the daily chart, really big resistance region, that 52.20. Reminder, quick 100% extension off the low, the upper median line parallel for the operative structure. Even the embedded structure, upper median line parallel is right there as well. And then this long dated median line. We've gone over this for months now. So you have a clear range. We'll favor long side while above the median line. You need to get through this 52.20 barrier to get further upside on this. You look for the 100 and 200-day moving averages backed by this confluence here into 53.80. Parendra, great to see you in the room, man. Good morning. Any questions on the pound? So we were hoping to see some volatility with CPI from the US and CPI from the UK today, but both coming in largely in line with expectations. We'll have to see what the Fed has for us. So that's a quick review, not really much to go on there. Good morning, Mike. May I see the sterling dollar 30-minute again? Thanks, says Christopher Hudson. Sure. It's right here for you. This is just a basic, really clean pitchfork off the lows. I know the swing trades got stopped out on that little dribble there below that key region of support, but that was the hold that you really needed to see to even have a notion that this thing might make another run on that upper median line parallel. And over the next basically heading into tomorrow, that upper median line parallel actually coincides with that key 52-52.20 region. So you have really clear resistance. The opening range low would necessitate a break of the median line. So that's going to be our bullish invalidation level. And the targets are extremely clear. So I think we're going to have to wait on Yellen to get some play here on the pound. Relative performance, guys, obviously, before we get started real quick, relative performance looks like this. You have the Kiwi, Sterling, and Cad with the top performers so far in the session versus the dollar. Aussie, worst performer, down 0.26%. And again, that was actually the short that we were on yesterday, so we'll take a look at that in just a moment. Any questions on Sterling before we move off? Chris, you got that? And don't forget, as always, guys, in the reports, you have the scale chart, which shows you a zoomed out view of the entire formation. So use that to your benefit. He says, got it. Thanks. You're welcome, Chris. Always good to see you in the room, man. All right. So moving right along. Next setup was Euro Oz. Another one that's, hasn't really given a trigger, an overnight trade. We were still waiting for it. The premise of the idea was this, and I even noted that this was more so, if anything, a radar chart, more so than a featured scalp setup, but it looked very clean, and certainly the levels still are very, very clean. So the focus here was on the proposed pitchfork off the high. As we noted yesterday, you didn't have any rebounds or tags of that, so you didn't have much conviction on it. We have since kind of strolled through, but we're still in a very clean opening range above support. Here's what it looks like. That breakdown to the downside there yesterday was actually a false break. We recovered right back. Whoops. Okay, so here was that break that we were looking at yesterday. Excuse me, an important thing to note was price had broken, okay, but momentum had not. You can see momentum was holding 40, price was dribbling lower. I was eyeing this down, and I even said it might be too early to tell. We'll look to see if we can break through this basic trendline support to get things going. Literally, that was the low. When I took this snapshot, was the low. We reversed and came right through. So long story short, we're still going to preserve a 51.50 opening range low for the week. Opening range high, I'm still going to favor 52.95, even though we did stretch higher, looking at those highs that we made last week, and a longer dated 50% retracement off of the highs sort of keeps this range in focus, okay, heading into the Fed. Now, a pair that might be a little bit more removed from direct intervention from Fed decision tomorrow, so you might have a little bit more of a quiet play here if you're looking to avoid event risk by way of the dollar. That being said, here's what the daily chart looks like. It's important to keep this in view. The whole purpose, again, of the short side call here is that we're coming into a major area of resistance. It's not only that 50% retracement. That's not even part of it. The major thing is this former median line formation. If you remember this dating back to the 2013 highs and 2014 highs, okay? Caught the lows, you couldn't swing up, remember? If you can't reach the median line and reversal to the upside or vice versa, or if it turns ahead of the upper median line, that's typically a really bullish signal. We broke down back below, and here's that same median line, again, as resistance. You can see for the last 1, 2, 3, 4. 4 of the last 5 days have tried to break through that, and we haven't. Momentum failing well ahead of 60. So the risk is for a downside break as long as we hold below 52, basically 53. It's 152.98. So at this point, going back to the scalp real quick, at this point, we can go ahead and nullify this. We're not going to sit there and follow a trend that might not be in place. So I'm going to get rid of this. We're just going to continue to focus on this weekly opening range. At this point, looks like you have a confluence here heading to tomorrow's price action. That's just a basic trendline support off the monthly low. Excuse me, off the low that you made there on the 4th. A nice wide range ATR. Again, this is a quarter of the daily ATR, is still showing about 50 pips on this pair. So I think it could pan out to be a really nice play. We need to get a break of this near-term range. Obviously, if the topside break, guys, this is the bullish invalidation level, by the way, or the bearish invalidation, excuse me, is right here at 53. If we make a break through that, and specifically if we close, there's really nothing major on tap until you get up into like 55.20, and that's a more important 618 retracement. But this is pretty big. Aside from the 50, look to the left there. Look to the left. Opening range high for August. Stretch highs for November. For December of last year. All in this range. So watch that key resistance here for Euro Oz. If Euro is going to pull back, this is a pair I'd like to play the pullback with. So if I take a quick segue, guys, here. Actually, do we have just an update to the Euro chart? This is what we were looking at yesterday with Euro Dollar. Same thing. If the Euro is going to pull back, this would be a nice pair to play through. You'll have a wider range ATR. Here's what Euro Dollar looks like on the 30-minute as of now. Okay, looks like we're trying to make a break of that basic trendline support. This has been a clockwork trade, guys. All of the levels now that we highlighted last week have been hit except for that 110.80 region. Okay, we tagged the 100% extension. Jeez. We tagged the 100%, the 100-day moving average. We tagged the 200-day moving average. Here we are breaking back below. The opening range low for the week comes in at 109.49. That's going to be the breakdown point for Euro Dollar. But the levels have been exceptionally clear. Exceptionally clear. We'll go ahead and adjust this just to the new high that we made. It's just a really near-term retracement from that low of last week. So looking for short triggers still in Euro. Again, a break of the weekly opening range will open up these south targets here. On the daily chart, just to show you how critical of a resistance region is, looks very similar to the chart we just looked at, right? You have the 50% retracement, again, of the October decline. Here you have former trendline support just off those lows that you made in March and April. Just off that slope, coming right through that region. 200, 100-day moving averages are there as well. So it could get some pullback. I'd be looking for support right at the upper median line parallel, former upper median line parallel. That coincides pretty darn nicely with the close high for the reversal outside day that we made here on the 3rd, early in the month. And that close was at 109.36. Further highlighting why if Euro is going to stay constructive near term, it's really got to hold on to this 109.50 level, 109.30 level. Excuse me, 109.39, 109.50. So basically 40.50, this whole 10 pip range here. Likewise, if you have any short exposure on there, that should be your initial target. We shouldn't be looking anything lower than that until we break through. Any questions on Euro? Again, a brief, quick scenario breakdown. What I said yesterday on daily effects, I still think is sort of the likely scenario in my mind and what I'll be looking for. You can imagine a scenario, guys, where the Fed comes out tomorrow. They do hike interest rates. They finally get that out the door. But they give a much more cautionary tone, meaning they might lower their projections for inflation. They might lower their projections for growth, or the interest rate dot plot might be pushed out a little bit more, a little further out on the calendar. All these things, if we do see them come to fruition and they do hike rates, still would probably be negative for the dollar. More so than anything, guys, what we're looking for tomorrow is the pace. How often are they going to cut? What are the size of these cuts? Or how often are they going to raise? What are the size of these tightening measures look like heading into the new year? I suppose they're going to come out with the same, data dependent type lines. But at the end of the day, the dollar is poised here for, I think, a rip higher and then a pullback on sort of an emotional play. Here's what the dollar index looks like. I'm going to segue really quick, guys, here. Dow Jones Fxcm dollar index, you can see is bobbling along that 100-day moving average for the last couple of days. That's at 12,042. Nice pivot that we've been looking at for a couple months here is also that 414 reversal day close, 10,071. You can see that's been offering resistance on a closed basis. Real nice pivots, support, breakthrough, resistance. We'll see what we can do here today. But heading into the meeting tomorrow, your bearish bias or the bearish invalidation level is right back up at 12,123. So you might see a rally into resistance, maybe even another test of that major key range that we pivoted on multiple times. That was the former high day close for April. And as long as we stay below that, the risk remains for a drop lower here for the dollar. So you can envision a scenario where, looking at the euro, right, you get one more move lower, a real strong move lower, then a rebound. Sterling, same type of gig there. Maybe another test of that 51.13 barrier. But certainly, even on the near term, here is what the dollar index looks like. Same chart that we published on, what was that, Sunday, I guess. So no change to any of the levels. It's actually been pretty clean. We're kind of just setting the opening range for the week. Let me just snap some of these levels like this. Quick. There we go. Just to give you some scope on where we are here in the dollar index. So near-term resistance, the upper median line parallel, followed by 12,106, 111, and then 123 would be the invalidation level. A break above that, probably going to see a much sterner rally here in the dollar. Avery, yes, we will look at sterling Oz, sure. And I think Gary also wants to take dollar yen, likely to do me as usual, expecting a perma bulls to come out to play for the dollar yen. Let's take a quick segue. We can do that. Here's what the dollar yen looks like. It's very interesting at this level. You know, it came into some slope support yesterday. I was talking with someone on Daily FX about this. Can't remember. I think it was James Stanley. You know, here's support. Okay, so I understand that we broke a major key support. We were looking at it on SB. We've been talking about that region, 121.11, 121.83 for a couple of weeks. I understand that that broke, but we can't, you know, just turn into a, you know, full-on correction mode yet. This is, on a closed basis, has still been continued to respect, even on the stretches last 2 days, you know, right into that former upper median line parallel. So I'm still cautious about, you know, favoring too much excessive short dollar yen. At this point, I can't say, Gary, that we'd be looking for the perma bulls to come back in yet. It's got serious resistance up at 121.60, 121.50. You got the median line parallel, the 100 and 200-day moving averages all in that region. So just because it's rebounding off support, I don't know if I want to start calling the perma bulls coming out yet, especially ahead of the FOMC, but certainly you know your breakout levels. 121.58, 121.57, major key resistance near term, and a break back above that 122.11 level, I think would really validate a broader reversal in the pair. But not a pair I haven't been looking at lately. The breakdown last week was sort of the play here. Dollar yen is notorious for getting into these disgusting trading sideways ranges, especially ahead of major key event risk. So I'm not going to really be focusing on this for the next couple of days. We'll come back to this literally like right ahead of the Fed tomorrow. We'll take a look at where we are. In the meantime, I think you got a lot better prospects elsewhere than dollar yen. But Gary, does that help? On the near term for dollar yen, here's what the scalp looks like. The levels actually haven't been all that bad. It's just that you just got to expect a lot of back and forth action, a lot of back and forth action. The opening range is set just below 121.25, basically. Nice confluence region here of 618 extensions. So it could get a pull higher, maybe a tag of this median line, then a break lower. Again, dollar yen's not really on my menu last couple of days. I think you get a better bang for your buck on euro yen if you really had to trade a yen pair, or even Aussie yen for that matter. Okay. So Gary says, it does. Dollar yen just frustrates me. Yeah, I hear you, Gary. That's why I've nicknamed it the abomination, man. Trust me, early in my career, dollar yen wreaked havoc on me. It took me for quite a ride And the one of the first couple of, or the first account that I blew up was on a massive dollar yen trade, so I'm well aware of its capabilities. Okay, so moving right along with yesterday's radar charts, the first thing I do want to go over is Aussie Dollar. This was what we were involved in, or what I was involved in most intensively last night. Hey Theo, great to see you in the room. Are you looking at oil or dollar CAD? We can definitely look at both for you, buddy. Dollar CAD and oil. Okay, just jotting it down. We'll get to it as soon as we get through these setups. I just want to review really quick Aussie Dollar. The call for the short side yesterday was just on the basis that this thing was coming into a nice resistance region. Much more apparent on the intraday chart, which we'll jump into in a moment. But just to give you some reference, you're looking at the highs that you made for September. The swing high that you made back here on November 25th. On a near-term prospect, it is a simple trendline resistance off the highs. Literally. Okay? And on the near-term chart, you'd look for a short signal up here. That's what the intraday chart looked like. We had this formation that we were working with last week. You can see on Sunday night, we published long bias while above this key region, looking to play into 72, into the 72 handle and 72.26. This was the bearish invalidation level. So while we did favor the long side here, we closed out those longs. So we didn't have any play on this front top side. But now you're coming into basic resistance, a clear pivot in price, right? Along that 72.80 level. Basic trendline resistance off the highs. Also in that region. Divergence in momentum as you made the high. So now you're just looking for a trigger. You're just looking for a stretch higher. And again, you're looking for about 21 pips. So it actually gave you a really nice trigger even on the 5-minute chart right there. You're looking for about 21 pips. Obviously on a trade like this, guys, timing wise for me here in New York, I can't be up all night. So unfortunately, I just put a 25 pip limit on that and it took it. If I was trading this live, what we would have done is taken a quarter of the trade off or half a trade or third, whatever your risk tolerance is. No one can decide that but you guys. Bring your stops down to that last high and see if you can get another stretch for another 25 pips down. You would have inevitably gotten it. So, but not a bad idea to get all in, all out right ahead of the Fed, ahead of a major key event risk. You never know. So in any event, for the Aussie dollar, it's still, the setup is exceptionally clean. Just a quick reminder, there hasn't been any alterations to the levels. Except for this retracement here that we had stretched into that 72.66 high. We took that retracement to the new high that we made right at 72.80. So if you just adjust that, you'll see that 38.2 held support pretty much until early this morning when we broke lower. So, excuse me, again, what's the game plan here moving into the U.S. session? Look for support on the immediate side into the 72 barrier. Okay, again, that 618 extension and the 618 retracement. The weekly open, or the weekly opening range high, at least for that Asia session, comes in right in that region as well. So looking for support here. Remember the daily chart. We're still working constructive above this major key region of support. And a break below this really that'll be the continuation for us. Excuse me. I don't know what's wrong with my voice today. The continuation lower here for Aussie. So look for near-term support at 72, 71.70, the weekly opening range low, that key 618, subsequent targets on the downside. Any questions on the Aussie from last night's radar chart? Of yesterday's setups, again, this was my favorite one. I just kind of wish I was still holding some on that short. Okay, so that is Aussie. We went over Aussie. Oh, quick reminder for everyone in the room. On the radar charts, guys, if the currency is highlighted in blue, that means that we've published a report on that pair recently. You can go ahead and click on that. It'll take you to nearest report and the latest update on it. Also new to the reports are every report is tagged with the currency that's highlighted. If you click on these guys, it'll do a search on SB Trade Desk for any reports that we published highlighting the Aussie dollar setup. So likewise in Jamie's reports, if you're in the report and you want to see when's the last time you wrote anything about the pound, click on the pound and you will see an archive of any of the updates that we had highlighting the British pound. So it's a really nice, cool tool there we got on there for you to be able to quickly identify and quickly find the latest updates on the pairs you guys are looking at. So quick update on that. But next up on tap, really quick talk about Kiwi Dollar. I don't have much to say on this. The major resistance I was personally looking at was right here, basically into 68, or yeah, 68. 67.96 confluence resistance. You had the 786 retracement. You had the former median line support, now resistance, and you had some divergence ongoing in momentum. So we were looking for some short triggers there. It broke briefly higher, and then I kind of didn't even pay attention to it afterwards. So it broke kind of briefly higher. Woke up and saw that earlier this morning. Here's the pullback. This is a big region. Okay, so if you get some conviction trade on this, again, some divergence into that high. You actually had a beautiful trigger break too. Really nice 3-point trigger break. Looking for about 21 pips per scalp. Not bad. Again, anything that you scalp on this on the short side should be within the weekly opening range. I'm not going to start targeting anything outside the weekly opening range until that gives way. And that's how we keep our near-term trading as disciplined as possible. So just let me zoom this out real quick for you. So looking at that former median line formation, the slope has continued to offer some really nice support to price. These are all the same slopes for that operative slope that we made off the lows in September. So if you can see this slope right here, this parallel off the highs from November, the early November open, I'm sorry, that late November high, offering some support now. Break lower, looks 67.40. Again, as a disclaimer, haven't taken any positions on this personally, but you're looking for some conviction, let's say, some evidence that this high is going to hold here near term before we start testing the low side. The only thing I just want to say on this is the momentum signature looked like it had done something really major on October. That was the first break above 60 they had seen essentially since back here in 2014, June. Okay, on the pullback, we found support ahead of 40. That's a constructive thing. But the resistance at 60 here suggests that we could be in a protracted time period where this thing is kind of moving laterally before it makes a major move. So I'm looking for 60 breaks to confirm the breakout, the reversal higher in momentum on a daily basis. If the trigger gives out, again, you'd be looking for that support near 40 to keep this thing at least in sort of a flat market range. So not my favorite play, but definitely major resistance here that we'll look at near term for Kiwi Dollar. On a dollar rally, might be a nice play. If the dollar does rally pretty strong tomorrow, with this at the extreme, and a multi-month high, might be a nice, or a 2-month high almost, might be a nice play to the downside. Any questions on Kiwi Dollar? All right. So next up on tap was dollar Swiss, coming into a nice area of support, a basic 618 retracement of the entire advance, and the weekly opening range was setting up right above this. Divergence all up into that low. 3-point divergence signal. So a lower low, a lower low, a higher low, a higher low. You're looking for long scalps while above 97.85. Here's what it looks like now. First of all, one of the other reasons that we were looking for that long play in dollar Swiss was just simply on this ML formation off the low that you made in May, the August high low. Okay, hasn't been the cleanest structure, I get it, but you have a whole host of things that were all confluencing in this region. 100-day moving average, lower median line parallel, although we didn't see too much of a strong reaction off it. This 98.47, 98.50 region has also been a major key player for the pair. And that was a monthly open for which month? That was last month's monthly open, the November monthly open. And the swing highs they made there for April. So big region of resistance. You'd expect to see a little bit of a rebound on the near-term charts. Again, nice area of support, divergence into lows. So that trigger actually did give out. Oh, I didn't see that from last night. So we had false broken, or we made a false break last night. We turned right ahead of 60. So for me, it's just an opening range. Get long towards the lows of the week, get short towards the highs of the week. It's still that play, although now you have a 60 break for the first time this week. And if we push through the opening range high, you'd be looking for that stretch into 99, 99.10 would be initial target. And hopefully by that point, we'll have some structure to the advance. But a nice key support here. Watch the weekly opening range. Bullish invalidation levels, very simple, 97.85, the weekly opening range low. All right. Any questions on Kiwi, on dollar Swiss? Okay, checking my notes. I said holding support, looking higher from here. Okay. Last but not least from yesterday, and I think we touched on this already today, Euro Yen. Another pair that has been very clean in the decline, structured decline that we're trading within the confines of. Here's what Euro Yen looks like on the daily first, and then we'll jump into the 30-minute. So it's important to note the major region that we're coming off of, and this was huge, a 618 retracement from the decline off the September high, but more importantly, you had the upper median line parallel for the structure we've been in for the majority of the year, actually since May. You had the 200-day moving average, which on a closed basis has been rock solid. And you had the 100-day moving average. So you can see a lot of these euro crosses heading into their 100 and 200-day moving averages. Euro Aus, Euro Yen, Euro Dollar, even British Pound looking to mark those major moving averages. You know, I'm not a big moving average player, guys, but when we're talking about using moving averages as support and resistance on things like 100 and 200-day, 52-week moving averages, things like this, certainly they do tend to come in handy. And more so than anything, before I even start to target a moving average, just look back in price action. Has it offered support? Yeah. Has it offered resistance? Yeah. So it's something I'll pay attention to. Same thing with the 100. I'm not going to just blindly follow it because it's 100. Has that offered some resistance pivots? Sure. Support pivots? Yeah. Right? Gives us a big region here. So the breakdown, we had a consolidation here for a couple of days last week. We broke to the downside. We rebounded right off of former lower median line parallel, which we're back above, and that completes a basic 38.2. The focus was on the decline off this high. Here's what the intraday chart looks like now. So yesterday we noted, look, we're looking for a stretch higher to possibly get on the short side, more near 133.51. That was actually the exact high that we made, if I'm not mistaken, which was a confluence region of that upper median line parallel and a basic 50% retracement just of this near-term decline. Perfect tag of resistance, a trigger in the near-term chart, Euro Yen, was right here. That gave out about 2 hours into European trade. So it was a nice opportunity to get a really tight stop against the high here on that trigger break, looking for 26 pips per scalp, right back at the weekly open, 132.93. All right, so we'll continue to favor the downside while within the confines of this formation. Still looks pretty clean. Still looks pretty clean. And the bearish invalidation level, very, very clear at this point as well. We'll mark that at 133.51. That'll necessitate a break of this median line formation. Certainly would shift the focus back towards the 200-day moving average and the 100-day moving average. Any questions on Euro Yen? Notes from yesterday say looking for a stretch into 133.51 confluence resistance for short triggers, and we got that. Okay, so from here, again, could get some support. I'm out. If we do get a rally towards here again, we'll look for a resistance. More so likely, it'll probably, if it doesn't give you a decent recovery to get back on the short side and breaks lower, you just have to look for support down at 132. Just to give you a picture of where we are in this trade. So there's that upper median line parallel that we came off of. Big, 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 big region. All right, so those are my setups from last night. Those are the pairs that I'll be checking out over the next couple of hours here as we head into the U.S. Open. Certainly, Euro Yen has been one that I've been wanting to get into. I missed that entry late last night. Aussie Dollar also, we'll be looking for fresh entries on that. Jumping into your questions here first, I want to cover what Bernard was looking at, the S&P 500 and DAX. Here's what they look like, Bernard. So for SPOOs, here's what that looks like. You know, we came into a really insanely beautiful region of resistance yesterday. I was in disbelief at the exact precision of this rebound. You're talking about the 100% extension from the decline off of the highs, and you're talking about the 50% retracement from the ascent off the September lows. You guys know how I love these confluences, especially if a 618 or 100 off the high confluences with a 50 or a 618 off the low. Those tend to be rock solid pivots. More so, you also had a basic median line formation right there as well. And literally the low is 1993 on the mark. So you came right into that region. You closed right below support, former support, now resistance, 2022. This rip higher, you could see this thing travel as high as 2058. I wouldn't be surprised. Doesn't mean that you're out of the woods yet. And in my mind, you know, even if this thing does rally that high, you'd be looking for short triggers up near that 2065, 2058 level. Keep in mind the 200-day moving average is right in there as well. So as far as the levels on the S&P, I think they're exceptionally clean. The one caveat here is if this was going to validate the break of this formation, then what does this mean now that we're getting back inside? All that means that on this rally, it's imperative that this upper median line parallel hold resistance for this to be the correct slope. But yeah, I mean, near term, I'd be looking higher towards 2058 for possible short entries again. Bernard, does that help on S&P 500? Feel free to take a snapshot of that if you want the chart for your own reference. Yes, thank you, says Bernard. You're more than welcome, my friend. Says, I'm long the DAX since 10,150. Okay, so the DAX also coming off of a pretty nice region of support. This is basically the 618 retracement of the advance off the yearly low, okay? And then this right here, September high day close. September high day close. Okay, big region of support. It's exactly what we did yesterday. We put on a doji for the session. That's indecision. That's likely to see a little bit more of an upswing too. I would be looking at this basic retracement off the highs. A basic 236. Let me just see where that comes in. Is right here at 1043. Okay. Next upside target. 10,621. I was going to say I wouldn't follow it, but you have really clean wicks at that level too. 10,621 would be a 38.2. Again, on same thing like the S&P Bernard on this. I wouldn't be surprised if this thing does show us a little bit more upside before it turns over. These are the targets I'd be looking for though. 50-day moving average, I wouldn't stress as much, but that 100-day coming right in view, right around 10,537. A broader structure here. Let me just check something out real quick. It's not the cleanest. And momentum, Bernard, holding 40, right? From overbought conditions or above 60 conditions. That's exactly what you want to see. Oh, this is what I wanted to do. Quick extension. I just want to see if we made 100 off the high here. Woo, right there. No way. So there's 100% extension off the high. So if this is correctionary, is my point, Bernard. This support is basically what you would take any long exposure off of. So you're long at 10,150. You got a great entry. Great entry. And just give me one sec, guys. I don't usually do this, but I do just want to jump into a little bit tighter of a time frame for S&P. I want to see if there's anything. Okay, so you see all this divergence that we're making? Price action making a new low, higher low, slightly, higher low, slightly. So yeah, you got a really nice trigger on this actually that looks like you could get some more topside play. So keep those levels I just mentioned in view. This is a pivot clearing cut right here at 10,666. So I'll be watching that. Clear support right around resistance. And again, that 38 too? I'm sorry, guys. Yeah, you might as well just leave that there. 21 first. So Bernard, hope that helps. On the German 30. Just know that you're coming off a pretty big resistance. Now, this being said, he says, thank you, very helpful. More appreciate that, Bernard. Thank you. This being said, guys, I do want to just put a quick caveat there that the Fed rate decision tomorrow is, has the propensity to undo all this. If I don't think they're going to, again, that's not my base case scenario, but I just want you to be a little bit more cautious heading, especially, this is probably the biggest event risk for the year because it's the first time we've seen the Fed move on rates since 2006, right? Almost 10 years. All right, so that's DAX, S&P. Someone wanted Sterling Oz. Who was that? Avery. I think you were looking at Aussie and Sterling Oz. Oh, Christopher Hudson. There you go. I see 30-minute. Oh, no, I'm sorry. That's not it. Okay, Aussie yen. Let me take Avery's question. Please, Mike, could you look at Aussie yen? Is a bear flag forming? Thanks. So here's what Aussie yen looks like on the daily chart. Well, here's what it looks like on the weekly chart. That was a pretty big reversal that we made last week off of a nice pivot in price. It's 2011 high. It's been kind of messy around there lately, but it's even a basic 38.2 from the decline off last year's high. So that's that. Here's what Aussie yen looks like on the daily chart. And again, to put things in perspective, you're coming off a pretty big region of resistance from earlier this month. Basic trendline resistance, 200-day moving average got a tag, and a nice confluence of fib levels. With that moved lower, taking out channel support and back below that October high. I actually haven't looked at this recently, so let me take a closer look at the 30-minute chart, Aussie yen. So I'd be looking lower below this region. Here's what I can tell you about Aussie yen, Avery. And again, I know that Jamie's on the short side of this trade as well. Look, this is a big region, and the fact that it reacted there last night was exactly what you wanted to see. And it's basically, or yesterday, this 88.09 into 88.20 region, right? Nice confluence of longer term and near term fib extensions and retracements, but even more so, just a basic pivot in price. And this is the thing that when you start to use fibs, guys, that you really start to stress in price action. A fib in and of itself, yes, it could be a target if you're looking at extensions. It could be where you want to start lightening the load if you're looking at a breakout. But more importantly, has price reacted to that region before? And if we look at that region we just talked about, resistance, support, support, support. Yeah, we sailed through it here on this really volatile early December trade. Here we are reacting as resistance. So I would like to see this lower. Momentum, again, failing at 60 is a good sign. Just near term off the lows here. You've already completed a 50. And let's get rid of this 236 at this point. I would say the weekly opening range is set just below resistance on this one. Avery, does that make sense? So you look for a break of the weekly opening range to validate it. So either a break back above 88.20, in which case it starts to look buying pullbacks back towards the daily chart, which is going to take you to this way larger, longer-term median line resistance. Or if you break the downside, you look for that confluence run, which we were looking at on the break last week, way down here. Basically the open for November trade, former trend line resistance, now support, current operative channel support, all coincide down here near 85.60 something. 85.46. Avery, does that make sense? Decent ATR, 100 pips, gets you about 25 pips per scalp, right in range of what our sweet spot is. It's just for me, the near-term picture isn't quite as, what's the word I want to use, as clean as I would like to see typically to get involved. Avery says, yes, it does. Thanks. More than welcome. Appreciate that. And more requests. Someone wants to look at dollar Cad and Crude. Theo, that was you. Thanks. I have to look through the list every time. Theo, great to see you. So dollar Cad and Crude. We're looking at both. So Crude came off an interesting area of support, which is, you know, if support really exists. This is where you would have wanted to see it in Crude, and certainly near term, it looks like it's held. So one thing I just want to highlight, lower median line parallel for this formation that's been in play since the start of the year, basically, since the February highs. Caught the highs there in June. Really nice pivot on the median lines. Caught the lows back in August. Look where we bottomed out yesterday. An exact and precise 1618 extension from a decline off the October high. Lower median line parallel. Confluence support. Here's the rebound. Now you're not out of the woods yet, and which is why I like the possibility for a crude, for a possibility for a dollar CAD turnaround. This is sort of the initial region I want to see broken. That's the former 2015 low day close from August. That's basically the 38 handle. Right now, that 38 handle coincides with the median line off the highs that we just discussed, and a basic sliding parallel off that first high from September gives you basically like 37.60 into 38. And that's near-term resistance I'm looking for on crude. If that breaks, I think you get a little bit more conviction of playing the long side more aggressively. But if you were holding any longs at this point, that should be your target right into 38. It's a big pivot, huge pivot. Not only the close low there, but both a median line and a sliding parallel. And we haven't seen prices this far out, guys, in quite some time. Momentum coming off of a rebound from 30. So you can see a scenario where this comes all the way up into the trigger. That could see, crude back up at 40. I don't know. All I do know is right now, you'd want to be looking for that stretch into that 2015 low day close from August. Theo, talk to me. Does that make sense? He says, yep. All right. So as it relates to dollar CAD, now that we have this view of, okay, well, we're coming off a pretty nice support barrier. Momentum's coming off a pretty nice support barrier. You could see a little bit more of an upside slope before you test anything major in crude. What does that mean for CAD? Here's what dollar CAD looks like. First, on the daily chart, something very similar. 1618 extension from the advance off the October low. Well, that's interesting because crude made a 1618 extension off the October high. Literally, this thing is just the inverse these days. So, it's the same exact trade, Theo. I'd be looking against 3760. That was a level that we talked about since the beginning of the month on the breakout target if we do max out those highs. This was a big region of resistance. So, yeah, that would be any short exposure you would take would be against yesterday's high. I know that Mark McDowell was tweeting at me last night that he was in a short there. So both of the levels, or the first level that we noted at 36.96 hit. I hope you took that one out. The second level didn't, 36.65. That just missed. Mark was asking if you were short, or he was short. He was asking what would be the downside targets, and those would be the first downside targets, a basic 618 off the high and a basic 236 off the low. First one triggered, second one didn't. Not necessarily looking for a breakout yet, but you have a very clean opening range below resistance. And crude, likewise, has a very clean opening range for the week right above support. Not really as clean because it's been a one-side stretch higher, but you get the picture. So a downside break specifically below here is what I would want to see to get the shorts going on dollar CAD. All right, get a break below that and you look to sell rallies subsequent. But right now, your key range is still right here to open up the week. Just to zoom out for you real quick. Again, for any of you who are new to the room, guys, there's a camera button in the top right-hand corner of your GoToWebinar screen. Feel free to click on that and take a snapshot of any of the charts that you see presented in our webinars if you want to review them later in the day. All right, so that is dollar CAD and oil. Going right through some of your questions here. Kyle says, loving access to IDO Search. I've been using it a lot lately for additional confidence in my trades. And Kyle, that's the best way to use it, man. We'll have some more coming out on IDO, but guys, IDO is live for all of the members who have been with SB previous to last Friday. So if you've been on SB, you have access to IDO at this point. Use it for your benefits, guys. It just it's limiting that we can't look at it here during the webinar because it is only open from 9:30 a.m. to basically midnight. So this actually turns on as soon as we close the webinar, but can be a great tool to help you A, get confidence on a trade that you're looking at, and B, point you out to some pairs that you may want to look at, right? A lot of the times the best skewed pairs are going to be like a sterling SEK or like a, I don't know, like a dollar NOK position or something that we're not really very not most very popular traded currencies, but when you get a really strong read on one of those, it might be worth taking a look at. So they also have proprietary IDO search research on their page. So, definitely encourage you guys to take a look through IDO and get some more confidence on your positions for sure. That's what I use it most for, is when I'm looking at a position and IDO is also suggesting that that side might be the more appealing one. Usually those trades I'll press a little bit more hard. Farouk, great to hear. It says, me too. I'm using IDO. Will there be a webinar next week? What's the holiday schedule for SB? We haven't figured it out yet, Farouk. Actually, I haven't actually spoken with Jamie about that. I will be here for the Monday, for the Monday Daily FX Tuesday SB webinar for sure. We'll update the webinar schedule shortly. So again, the webinar schedule is always posted on the homepage, guys. You can always click on the homepage and it'll be the first of the announcement there. Avery says, sorry, Mike, have you gone through Sterling Oz yet? If not, please, could you, if you have time? Sure. Avery, I was looking through the questions. I knew someone asked it. I think I missed it somewhere, but let's look at Sterling Oz. And Petra wants to look at EuroCAD afterwards, so we'll do that as well. Sterling Oz, I haven't checked it out. Let's take a look and see what it looks like, Avery. She's a tricksy one. All right, see this reversal here. This was pretty big, break and reversal through. Your major resistance on this one, it's probably going to be at that 618. Yeah. So basic trendline resistance off the November high, 618 retracement, really nice region there, right around 211.85. Near-term resistance, key support, same as last month, 207.18, 207.90. Let's see what it looks like on the near term. Okay, here's what I would say. So you're putting in a basic opening range. You're mid-range for the week, Avery, so I'm not going to really like putting any positions on from here. This is basically your right slap in the middle of the weekly opening range. You got a range from let's just say 212 down into 208.40, and you're right slap in the middle. Momentum has been all over the place, but it does give a slightly short side skew in that you're way oversold here, and you're looking that you're just about to break above 60 here. I'd still be looking for short triggers from there, but not my favorite setup at this point. The play that would put me in an interesting play here would be if we break through this high. That'd be a clear-cut scalp bias towards 214.50, looking to buy pullbacks in this region where you've seen no major reversals or pivots in price over the last couple of months. But right now, the immediate top side would still be 211.50. I'd still be respecting that near-term resistance. So let's put that at the intersection right here. Does that make sense? And again, I'm just going completely off the fly here. So I'd be looking for either short exposure from there, or if it breaks through, this is going to be the near-term bearish invalidation level. So if it breaks through, you look to buy pullbacks towards that 764. As it stands right now, though, you would be looking for a stretch higher into that region. Does that make sense, Avery? Says, yes, it does. Much appreciated. All right, cool. So hope that helps on Sterling Oz. We are over on time, and I think I might have missed one question from Petro. Yes, EuroCAD. Here it comes, buddy. Let's take a look. Chris Hudson says, Mike, for those of us who can't trade these super clean levels on the indices, is there any pairs that you would use as a proxy? Risk pairs are risk pairs. I mean, you'll typically see those move, commodity stocks with basic risk trends, but I wouldn't necessarily correlate that per se. I think you'd want to follow the yen crosses a little bit more, and just the dollar in general as the main barometer. But Euro CAD, real quick for Petro. Here's what it looks like on the daily chart. And see what the near-term chart looks like. Euro CAD. Again, very, 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 very simple trade of an opening range taking shape just below resistance. You've got some divergence and momentum making those highs. A break below that near-term target, which is basically 150, puts you in a short side scalp bias, targeting a basic retracement off the low is what I'd be looking at. So something like this, Pietro. And again, you haven't broken the opening range low, but this is contingent on that opening range low giving out. Such a scenario, like your initial targets would be at 49.23 or so. Also, you'll want to see if you can give the decline some structure. So let's just see if there's any ML formations on the near term that might offer some guidance. Maybe, could be. Too early to tell. On its face value, excuse me, I'd just be looking for a break of the weekly opening range. From the daily chart, it looks like you could see a little small turnover. The scalp bias would be bearish, but broadly speaking, guys, this trade is super constructive on the long term. Okay, we did have a couple of months to the downside. Momentum holding 40 pretty darn well after multiple breaks above the overbought condition, and here we are above 60. So the momentum profile still remains very constructive. I just think that you're kind of teetering out here. You might see a near-term correctionary pullback, which is why in the near-term charts you'd want to look for these downside targets, but wouldn't get too aggressive beyond a basic 236 for now. See, maybe this slope offers something a little bit cleaner. That'd be a nice break there, near term. Weekly opening range low. All right. Pietro, does that help? He says, perfect. All right, right on. Avery, I appreciate that. Kyle says, Mike, what's your trading approach going into Wednesday? Are you staying flat? Kyle, I don't know. If there are some things that pop out tonight on the scalp while I'm writing my reports, I'll take them. I'm a big advocate typically saying don't take any positions or major positions ahead of major event risk, but for a near-term scalp position, if the trigger is there, I'll take it. Now, what is extremely important to understand is tomorrow you're likely to see some liquidity conditions as well. Liquidity has been, or overall volume has been sort of pathetic since the start of the week. So don't give too much emphasis behind these moves. That being said, you're expecting a lot of volatility tomorrow, and especially if liquidity is thin, you could see a lot of volatility and jackknife action in price action. So if anything, Kyle, I'd lighten any loads going into the print, especially if they're in the money. Readjust your stops, make sure you have a good sort of gauge on what your invalidation levels are, and hope for the best. I mean, again, it's not likely that you'll see the majority of the move right on the release per se. Markets are widely expecting that they will hike interest rates by 25 basis points. The devil will be, or the details will really be what moves markets, scope and pace of interest rate hikes moving forward, and the economic assessment from all the committee members on inflation growth and interest rates. So going to be a great day. Again, we'll be on here tomorrow morning. We'll go over sort of our game plan going into the release. Till then, best of luck trading, guys. Try to stay a little nimble. We're going into a big day tomorrow, and we'll cover things back tomorrow morning. Cheers.